Ladies and gentlemen, good day and welcome to the Q3 and 9 months FY21 earnings conference call of Capacit'e Infraprojects, hosted by Anand Rathi Share and Stock Brokers. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rachit Kamath from Anand Rathi Share and Stock Brokers. Thank you, and over to you, sir.
Thank you, Margaret. Good morning to all the participants to the Q3 and 9 months FY21 earnings conference call of Capacit'e Infraprojects. Today, we shall start with a brief commentary from the management and then proceed to a Q&A session. From the management, we have Mr. Rohit Katyal, Executive Director and Chief Financial Officer, Mr. Alok Mehrotra, President Corporate Finance, and Mr. Nishit Pujari, Head Accounts. Without any further delays, I'll now hand over the call to Mr. Alok Mehrotra from the management. Thank you, and over to you, sir.
Yeah, good afternoon, everyone. A very warm welcome to our Q3 FY21 earnings con call. Along with me, I have Mr. Rohit Katyal, ED and CFO, Mr. Nishit Pujari, Head of Accounts, and our Investor Relations team. I hope everyone has had an opportunity to look at our results. The presentation and press release have been uploaded on the stock exchanges and our company's website. Before I take you through the operational and financial performance, I would like to highlight a few points. The business ran as usual for the first 2 months of the year, but all real estate activities came to a sudden halt in late March with the lockdown. Although the economy started to unfold from June onwards, the situation remained grim through September as construction activities were stalled because of labor paucity and uncertainty in the minds about how the situation will unfold. Housing sales began to improve from October onwards due to pent-up demand and festival euphoria. The softening of interest rates, coupled with reduction in stamp duty on registration of properties in Maharashtra, acted as a catalyst for higher sales in 2 key markets, Mumbai MMR region and Pune, which were the positive factors that paved buyers' interest to and return to the market. At the macro level, the grounds for a likely surge in demand for residential housing and commercial space in the months to come are not hard to foresee, as they are linked to a strong uptick in the economic growth coupled with a favorable interest rate regime. The real estate sales, especially in MMR, have witnessed record offtake and will help developers to complete projects faster. In the quarter gone by, we have started witnessing ramp-up in pace of execution sequentially. Further, our strategy is to focus on the following aspects. Projects with healthy cash flows to strengthen our balance sheet and cash flows. Execution of public sector order where the working capital is favorable. Strengthen our working capital cycle. Now, allow me to give you all an overall view of our operational performance during the quarter. The order book, total order book, private and public, excluding MHADA, as on 31st December 2020, stood at 9145 crores. Residential segment constitutes 24% of the order book. Commercial and institutional segment constitutes 19%, and mixed-use segment constitutes 57%. Our order book from the public sector as at the end of December 31, 2020 stood at 5526 crores, that is 60% of the total order book, whereas from the private sector it stood at 3619 crores, 40% of the total order book. Work is going on at a good pace on all orders. the company is confident to achieve project completion within the stipulated timelines. In Q3 FY21, the company was able to recognize healthy revenues and expects better revenue trajectory in Q4 FY21. With such momentum in execution and robust order book, we expect growth phase starting in FY22. Our continuous focus on client quality and cash flow monitoring has certainly strengthened our business model, especially in these challenging times. Our standalone financial performance for Q3 FY21 is as follows. Total income for Q3 FY21 is 311.1 crores as compared to 183.3 crores in Q2 FY21, depicting gradual increase in our pace of execution. EBITDA for Q3 FY21 is 59.9 crores as compared to EBITDA of 45.3 crores in Q2 FY21. Witnessed significant increase in EBITDA due to stringent cost control measures and operational efficiencies. PAT for Q3 FY21 is at 15.2 crores as compared to 4.6 crores in Q2 FY21. Our net debt equity ratio at the end of December 31, 2020 stood at 0.15 times. Collections are robust as we have collected about 271 crores in Q3 FY21. With this, I now leave the floor open for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. The first question is from the line of Ritesh Gandhi from Discovery Capital. Please go ahead.
Hi, just had a couple of questions. As your order book is increasing with the kind of government orders which you are taking, how should we be thinking about EBITDA or actual margins for the business going ahead? Is it at a lower EBITDA spreads or is it at around the same as your private orders?
Yeah, good morning, Rohit. My throat is not very good, so pardon me if you can't hear everything clearly. Now, the order book from government, 90% of that is design build. So it's pure EPC projects. It's not a BOQ executable order book, and therefore, you are having about 35%, let's say 25% of the revenue in the 300 crore revenue which we have done. For current quarter, still the EBITDA has shown a slight improvement over the prior quarters. So yes, we do believe that given the current order book, the EBITDA levels are sustainable because the projects of government, as I mentioned, 95% of them are on EPC basis.
Got it. And from our experiences, is the receivables cycle also in line with the private business as we look at potential, equity IRRs and ROCs for government versus the private, businesses? Or are they better, in fact, maybe?
So let us come to the first point of debtors. The debtor levels at the moment of government are nearly about 45 to 50 days, which means that they are better than the private sector. However, having said that, the private sector now has only AAA rated clients, and any private sector client who doesn't pay within the stipulated contract terms, the work will be suspended, as I have been mentioning over the prior calls. Now, so that's on the debtor side. What was the other part of the question? Now, ROCE or ROE is on the company level. It's not computed on the project level. These are all cash contracts, and therefore, maybe some projects may have a higher ROE or ROCE. Some may have a little bit lower. But as I said, that over the next 2 years, you will see a significant improvement on the ROC and ROE.
Got it. And the last question is, given your robust order book right now, where do you see revenues for FY22 just sort of executing on the existing order book and potential new orders?
So, given the current order book, first of all, as you're all aware, we don't give any guidance specific. But this particular year has been an exceptional one. And therefore, as a one-off, the company will be giving a guidance for 21-22. We do believe that the revenue will be upward of to 2,000 crores.
Got it. Thanks. That's all from me. Thank you.
Thank you. The next question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Hello. Yes. Sir, can you repeat the guidance that you said above 2,000 crore? Am I right, sir?
Yes, upward of 2,000 crores.
And can we expect from Q4 itself, sir, 500 kind of run rate for the quarters?
Now that is an over-expectation. I have in the last quarter said quarter 3 of stability, quarter 4 of growth. So obviously there will be a substantial upside to Q3, but no further comments on that. As I said, that we are looking at the next financial year as a comparative to FY20, and we do believe that the upside would be 35% on that, not considering FY21 at all. But we do believe, answering your question, that quarter 4 will have a substantial upside when compared to quarter 3 of the current fiscal.
And sir, have you written off some particular order in Q3? I think order book had climbed 9,800 crore to 9,145 crore.
So as a company practice, orders which do not start within 6 months of their being received. One is Oberoi Mall that is in redesigning and therefore is expected to start next quarter. Once it starts, it will come back into the order book. And obviously, because substantial time has passed, there will be a renegotiation on the prices as per current levels. Number 2, Nilkant Phase 2 has not started for a substantial time and therefore has been moved to slow-moving order. So basically, the order book remains unchanged. What we have given you is the 100% active order book as a practice of the company.
And sir, in FY20 we had a very good order inflow. How do you see the rest of the Q4 FY21 and FY22? And do you see more affordable housing projects available in the state of Maharashtra? And are you looking for any other project outside Maharashtra which are large and chunky?
So we continue to focus on the 7 geographies which all of you all know. Absolutely, at the moment in time, the Maharashtra state takes a lion's share of the order book. Our visibility on the government side for hospitals and affordable for the next 6 months is the clear visibility. The tenders which can be bid is 40,640 crores on the public sector side and close to 26,000 crores on the private sector side. And therefore, the order bid pipeline is very strong, which gives us a comfort that we should more or less be able to do an order book of 3,000 plus crores in the next financial year. That's been our track record.
Understood, sir. And is there, can we expect a substantial ramp up in CIDCO project or affordable housing? Can we see substantial ramp up in Mumbai?
If I understand the question, ramp up in CIDCO project, yes.
Yes.
We expect to start billing about 55 crores per month in the April to June quarter, increasing into about 65 crores in quarter 2. And from quarter 3, we should be having a run rate somewhere between 80 to 90 crores. And quarter 4, we should take that up to about 100 crores plus. So this is the approximate run rate as per the ramp up, because all the sites are mobilized. Work has started on all the sites. We have earlier mentioned in last quarter the engineering is totally complete and there is now no hold. So Obviously, in the monsoons, we have to take into consideration the dip of about or loss of 15-16 days. So accordingly, the revenue will be built up.
And so how are you impacted by the movement of steel and cement? Do you think the margin pressures, or we are hedged to a large extent?
So 98% of our order book has a 100% pass-through. So if the steel goes to 30, we don't make money. If the steel goes to 70, we don't lose money.
Understood, sir. Understood. Thank you, sir. Thank you.
Thank you.
And best of luck.
Thank you. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead. Parikshit Kandpal from HDFC Securities, your line is in the talk mode. Please go ahead with your question. We would request you to kindly unmute yourself from your mobile and go ahead with your question. Due to no response, we'll move to the next question, which is from the line of Dhananjay Mishra from Sunidhi Securities. Please go ahead.
Yeah, good afternoon, sir. Congrats on very decent recovery on Q-on-Q basis. So I missed the CIDCO contribution part. You said what was the contribution in this quarter and how it will be in next Q4 and next year Q1?
So in the quarter 3, we have invoiced 51 crores to the client. We have started receiving the RA bill payments as per the contract terms. We believe that in quarter 4, we should double up that revenue rate. And as I said, from quarter 1 of next fiscal, it should be in the range of 40 crores to start with for quarter 1. Sorry, 50 crores in quarter 1, 60 to 65 crores in quarter 2. Quarter 3 should look at 75 to 85 crores and quarter 4, 100 crores plus.
So this is monthly run rate you are talking about, right?
Monthly run rate, sir.
Sorry?
Monthly run rate.
Monthly run rate. So this quarter we had a total of 50 crore, right?
So we are nearly doubling that up in the current quarter, maybe a little bit more. I hope to give you a pleasant surprise when we meet next. But at the moment, on the conservative basis, this is what we are informing you. So the run rate is not stagnant. It's going to double up. And then obviously in quarter 1, as we have mentioned, it's going to see another jump of 80%. So it's substantial ramp up.
Okay. And sir, what about this Taloja site? We have acquired the land. It is handed over by CIDCO.
Taloja land?
Yes. This CIDCO project, the seventh one, which is the bigger one.
Yeah, the 7th location, 30 buildings has been handed over. Our bill for design and engineering has been recorded and paid for. Apart from that, the client has already handed over a 8th location called Navade, one portion to us and one portion to our competitor. So we believe that the ramp up and the billing schedule which I just provided is absolute certainty.
Okay. So we have mobilized our resources on 7th location as well?
We are mobilized on the central yard. We don't have to mobilize at each location in a similar manner because the central yard in Kharghar is entrusted with the responsibility of all the 7 locations and now the 8th location also.
Okay. And we are going to, CIDCO is going to launch this project by March itself, March or April, or it is some delay?
I cannot comment for sure, but I do understand that the first 20,000 houses may come up in April or May.
Okay, sir. And sir, what about JJ Hospital project? How it's going?
JJ Hospital project, the design up to plinth has been approved, billed and payment received. Site is mobilized. Piling is in process. And certain tree cutting permission is awaited, which will happen in the next 10 days, which means that you will see a substantial revenue happening in the next financial year in excess of about 150 to 160 crores.
Okay, sir. And so lastly about margin, we are at 19% EBITDA margin. So this margin will sustain or maybe may improve slightly in next year?
As I have been always telling that you have to look at the margin on the yearly basis. All right. A lot of operational efficiencies, reduction in salary costs, blah, blah, have kicked in. However, we have to account for that the whole infra space is buzzing with a huge bid pipeline. So talent, which was maybe reasonable 6 months ago, may go expensive again. So therefore, my guidance for the EBITDA will be between 17 to 18.5. If it goes better, you can send me some sweets.
Okay. Okay, sir. Sir, can you give the figure of gross debt and cash level as on December?
The gross debt stands reduced by 40 crores from Q2 to 371 crore. The net debt is close to about 130 crores.
130. Okay, sir. That's all from my side, and all the best for future.
Thank you.
Thank you. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
Yeah, good afternoon, sir. Congratulations on a very good set of numbers. Sir, about the SBUT project, there is some problems with the municipality. So you feel it should be contributing in the coming financial year also?
No, we have handed over. We have got the completion certificate, sir. Only our final bill of 6.5 crores is under final scrutiny, which is a normal practice, and that we should receive it, let's say, within this month or early next month. As far as our project is concerned, we have delivered, handed over, and received the completion certificate.
And secondly, sir, any progress on the various hospital projects that central government is now very seriously pursuing? Do you feel that there could be a lot of orders coming there itself, and there would be a sense of urgency on that?
So the bid pipeline guide, which I just mentioned, of 40,000 odd crores, now that nearly cost about 30% constitutes hospitals. In Maharashtra alone, both from Ministry of Medical Education, MCGM, we see a bid pipeline of close to about 10,000 crore. So there is substantial investment which will come in healthcare. State governments separate, central government separate. Central government outlay was 60,000 odd crore over the next 5 years. And if you add states, you can easily make it 3x, 4x. So there will be substantial opportunity across India in the hospital sector, healthcare.
Thank you so much, sir.
Thank you. The next question is from the line of Jeetu Punjabi from EM Capital Advisors. Please go ahead.
Hi, thanks, Rohit. Thanks. You guys have done very well, so it's great to see the recovery. I've got two broad questions, right? So one, usually on closure of projects, you get whatever, I don't know what that number is, 3%, 5% value of the project and stuff like that. So my question is, are there any of these last payment tokens that you think will not come, or any write-offs that you have to write off because some private sector guy is not going to pay and you kind of feel it's going to come? Is there any of this in the books that you think will hit us over time?
So your question basically pertains to the security deposit or retention which is withheld.
Correct.
From the RA bills. So if you compare with Q2 of current fiscal, the amount has reduced by about 20 crores. But if you compare it with the levels of 31st March, you will see a reduction of close to about 40 crore rupees. We are dealing with AAA rated clients, and now most of the clients, if not 100%, let's say at least 90%, all these monies are receivable against guarantees.
Okay. So you don't see any potential write-ups in that?
So that's your second part of the question. We never expected IL&FS to go bad, and therefore the NBFC crisis, and therefore some of the developers going under the weather. And therefore, such a small balance sheet, Capacit'e Infra has a provision for expected credit loss, ECL, of 50 crores to navigate through any surprises in the future. We do believe that over the last 8 years since inception, we never have had any bad debt, and we hope that you will see reversals of this provision in the next financial year.
Okay. Now, a second question, Rohit, is more, look beyond 2022, and you've given a guidance for 2022, which we really appreciate. But look beyond 2022, and how do you see the scenario emerging? Are you going to widen your private sector client base, or are you going to stick with that and work more with the public sector guys? And what kind of, crystal ball gaze, what kind of demand side dynamics you see over the next 2-3 years after that? I'm not asking for 1 year, but just a bit of a longer term view on how do you see the picture emerging?
So whether it is private sector, public sector, autonomous bodies floated by central state governments, the basic mantra is quality of the client. If the client quality is good, you will get your payments. An intelligent client is better than a client who doesn't understand the subject. So quality of the client will be the biggest focus. This we have reiterated all through. And therefore, we are not averse to growing our private sector order book. We are seeing a serious traction in Q4 inquiries coming, which were not there till Q2 and till end of Q3. And therefore, I do believe that next year is going to be one of the best years for the organization. Now, let's go beyond 22. You are as good as the health of the orders and the health of the clients which you take today. What orders we have, what we intend executing over the next 3 years is already available with you, and therefore the growth is available in front of you. Now, how that would pan up between private sector and public sector, or maybe multilateral funded projects, it depends on the central and state governments and the private sector launching projects. With the current uptrend in the real estate sector, which was totally unexpected, has been reshaped. So we do believe, and whatever benefits have come in the budget, we do believe that the bid pipeline for all the 6-7 players in the building sector is going to be very, very robust, and they will have the opportunity to pick and choose their orders, depending on which geographies they are coming from.
Okay, you don't see a balance sheet constraint in doing that at that point?
If you see, in the last quarter, we suspended 2 projects because of non-receipt of payment, and we have started again in this quarter after the payments come. So the point is, balance sheet health is of primary importance. If you have to lose 50 crores revenue for that, so be it. That can be explained. You see, in the most tough times, we have reduced the debt portion. We believe that another 40-50 crores will come down in the current quarter itself. And by June end, we should be at or better than pre-COVID levels. Balance sheet strength cannot be compromised on. Top line can look pleasing for 1 year and 2 years. Ultimately, it's the balance sheet strength which you will be talking about.
Okay. Wonderful, Rohit. Thank you so much. Wish you all the best and all the best. Take care. Bye.
Bye.
Thank you. The next question is from the line of Suraj from Prithvi Finmart. Please go ahead.
All my questions have been answered. Thank you.
Thank you. The next question is from the line of Parvez Akhtar Qazi from Edelweiss Securities. Please go ahead.
Good afternoon, sir, and congratulations for a good performance.
Sorry to interrupt you, Mr. Qazi. Your voice is not very clear.
Hi. Good afternoon, sir. Congratulations for a good performance in Q3. So I had 3 questions. First is, if you could update about the status of the BTD Charles project. Second, what is the capex that we did in Q3, and what are our expectations for Q4 and FY22? And lastly, what is our expectation on the working capital cycle front going ahead? Thank you.
Hi. Now, come to BTD first. The government has taken out a circular to speed up the project, where the height of the rehab building has been doubled from 22-story to 44-story, and all the underground car parks have been removed to make it multi-level car park, which is known as MLCP. Now, what this does is that from next month, the entire rehab portion, the government wants to be completed in 4.5 years from the zero date, that is the handover of the first building, as against 8 years earlier. This is a very positive thing, and we do believe that substantial revenues on consolidated basis in the SPV will be recognized from Q2 of next financial year. The rehab portion is already continuing at the moment in time, but this initiative by the government and a GR is already in place. I will tell Amit, my colleague, to forward it to you. So it's a matter of time, maybe in the next 10 days. So we should have the go ahead for these buildings, the height of the buildings, and which means that the earlier building 77 or 78 of rehab will stand reduced to 29 to 30 buildings with the height in the floors. That's on the BDD side. Number two, I didn't understand completely. You were asking for CAPEX. The total CAPEX for the year is approximately 40 crores. Majority of that going towards Oberoi, Piramal and CIDCO. Your third point was you wanted some projection on Q4. As I mentioned earlier in an earlier question, you will see a substantial increase over the Q3 in Q4, and the target for FY22. This is the first and last time I'm giving a target because we want you all to compare us with the FY20 performance and not the FY21 performance. Upward of 2,000 crores. Upward of 2,000 crore is for FY22. The working capital over the next 2-3 quarters, as I mentioned last time, you see a substantial reduction in the creditors. You are also seeing a reduction in debtors, and you are seeing a reduction in the gross bank debt also, which means that the strategy of working with quality clients is finally paying off, and we do believe that by June quarter we should be at the pre-COVID levels, and by March of 22 we should be the pre-IL&FS debacle levels. The pre-IL&FS debacle levels were 56 days without retention and 72 days with retention. Hope that answers your question.
Sure. Sir, on the CAPEX part, what I actually wanted is what have we done in the 9 months and what, so you 40 crore that you mentioned, that's the target for FY21 or FY22?
No, 40 crore has been done till December, including CIDCO. All right, it's the cumulative. The total CAPEX for CIDCO has been close to about 85 crores. And therefore, that, as I had mentioned last time also, that will be spread over 2 calendar years.
Okay. Sure, sir. Thanks. That's it from my side, and all the best.
Thank you.
Thank you. The next question is from the line of Alok Diora from Yes Securities. Please go ahead.
Good afternoon, sir, and congratulations on great numbers. So just wanted to understand the projects which have been removed from the order book. So you mentioned about one project being of Oberoi and one another project. So is this the practice which we followed even before? Because earlier we have seen some projects like of maybe a Kalpataru project you removing from the order book because of the delay in payment. But in Oberoi Mall, is it like from the client side we have been asked to renegotiate, or if you could just elaborate on that?
No. What I mentioned is, as a practice, slow-moving orders are removed from the order book, and whatever order book is intimated as a prudent practice, it's a 100% executable order book. Number one. The Oberoi Mall has undergone design changes, and therefore will have to be costed again. And therefore, while we have a firm order, letter of award from the client, it is normal if a design change happens, there will be negotiation, and maybe because of the 2034 DSR, even the area may increase, and therefore the value may go up. Now therefore this is very different to the Kalpataru issue. Kalpataru issue, make no mistake, was on the payment front. Oberoi is one of the best clients on our portfolios, and their debtor levels are nothing more than 40 days. So that's not the case. The second order which has been removed is on Nilkant, Phase 2. Phase 1 we have completed. Phase 2, the client has not been able to start as yet. And therefore, obviously a 4-year-old pricing will not work. And therefore, that also has been removed from the order book. The third order removed is Kalpataru MIG. The client paid some money, after that has not been able to pay, and therefore we have removed that from the order book. So these are the three orders, substantial, which we have removed. Out of this, we expect Oberoi Mall to be back in the order book, let's say by first quarter of next fiscal. That's our understanding, but ultimately will depend on the timelines for design completion and other statutory approvals obtained by our client.
Sure, sir. And also wanted to understand if, like you mentioned, one Kalpataru project was removed. So typically when we do this, do we end up losing some money, or we just, how do we take it forward from there if some project is removed and work is stopped?
So there are two aspects to that. Number one, it is whenever we go to a client in such a situation, it's very clear that at least we at our end don't see a proper target available or a proper schedule available with a particular client. And therefore, there are two points to it. One is the certified debtors, creditors, debtors, that is the RA bills, and the second part is the unamortized site establishment. The site establishment is either purchased, in most cases, like Aryan, which was removed last quarter, is purchased by the client. All right? So the question of losing money does not arise. Yes, of course, if your debtors are there and they are beyond 360 days, then as per the stringent ECL guidelines, as I have already mentioned, we are close to 50 crores, and there are other additional provisions of about 10 crores. So we have an overall provisioning, including ECL, of 60 crores. That is a substantial amount. But 9.9 or 10 times, we haven't lost money because of a foreclosure of a project from our end.
Sure, sir. Just last question. You mentioned about revenue guidance. If I understood correctly, it was around 2,000 crore for FY22. Is that correct?
Absolutely.
Yeah. So the SIDCO would be around whatever run rate you mentioned. If we just put it at an annual level, it would be around 800, 900 crore around that.
Could be 750, could be 900. But then there are other projects. Generally, the target given out contains a substantial safety factor because the private sector order book, 100% operational, is close to 3,800 crores. Now that has to be completed over the next 2.5 years. So there is a substantial revenue which has to come from the private sector also. So it's basically distributed. I will tell my colleague to forward a mail of the expected revenue project-wise for the next fiscal.
Sure, sir. That would be helpful. Thank you so much and all the best, sir.
Thank you.
Thank you. The next question from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Yeah, hi Rohit. Congratulations on a very significant recovery during this quarter. My first question was, last couple of quarters we've been touching upon the payment issues and the suppliers asking us, not giving any credit to us now. And LC also has been taken away, has been converted to fund-based limits. So now any further challenges? I mean, do you think these challenges are easing now and funding availability has improved, or do you still believe that challenges will continue and it's the clients now who will basically have to reduce the debtor days and pay us maybe shorten the debtor cycle overall to match up with the creditor side?
It's something very dynamic, You are aware that the earlier credit terms were 90 days, at times 120 days. That supply chain, as per my understanding, is as good as over. So either you will open an advance LC for commodities or big ticket size projects, and the other terms will come down to maybe 30, 40 days. This is here to stay because it's not in our hand as a general contractor. The problem is that there are a lot of payments held up of the small vendors and other places. So obviously they are not in a position to give extended credit. Now this challenge more or less has been overcome. Second point, you mentioned about the non-availability of LC because it was converted into CC. 50 crores plus of LC, CC has been reinstated into LC. And that is why you see a total reduction of 40 crores in the gross debt as compared to Q2. Am I right?
Yes.
So therefore, LC available at the moment is 50 crores and I believe another 30-35 crores or thereabouts should be further available by March, pro rata, January, February and March, and we should be at pre-COVID levels by June quarter. So your gross debt level, more or less, give take 5-10 crores, 15 crores, will be at the March levels or maybe the December levels by June quarter. December 19 levels by June of 21.
But whatever was the conversion, so basically that is winding off now, so and it's going back to the LC limits, right?
Absolutely, because the point is, no one wants to pay us 8% or 9% interest when today LCs are available between 5.5 and 6.5 per annum. Secondly, it's not a debt. The cash flows are robust. Even if you see in the current quarter, out of 303 crore, as against 303 crore, 272 crore would have has been received. And as actually opposite to the popular belief that only we did not execute the project of Vadhva Vice City in quarter 3 because the payments came in January, and therefore we lost a revenue of 25 crores. Oberoi OGC has just started this quarter, the non-tower area. The tower area also should start this quarter, and the average revenue from that project was 10 crores. So basically 65 crores was lost, about 60 crores was lost on these two projects. All right? So this is what I'm trying to say. At the end of the day, any debtor or any client not paying within the contractual period, we are left with no choice, and rightfully so, to stop the work. We cannot work in the pre-COVID fashion where we will wait for 60 days, 70 days. It is far too risky, and we cannot disturb the improving working capital cycle by one or two such clients who choose not to pay. And therefore, any client not paying within the stipulated time, work will be suspended.
The second question was on your outlook on ordering, looking about 3,000 crores next year and 2,000 crores of revenue next year. So when I look at the real estate sector and the clients which you have, almost like marquee clients across the order book, and when you're seeing uptake and when you're talking about gain in market share by organized players and the kind of credentials you have in high-rise and super high-rise, I mean, it's unmatchable or unbeatable versus the peers. And also government ordering is expected to be very robust. You yourself has given the kind of big pipeline there. And when you correlated with 3,000 crores of inflow, which was largely coming from the private sector in the historical years, and now government is going to add on top of it. So doesn't this guidance look very conservative, or you want to be conservative, or there are constraints on working capital side or funding side and getting limits? That's why you're not chasing growth right now. So if you can just throw some color on that. Even on your revenue, 2,000 crores, 1,900. I counted it's about 900 coming from the CITCO project. You have very strong clientele in the private side. The order book quality is now improved significantly. So, and used to average about 1,500 to 1,800 crores on a yearly basis from private. That leaves only about 1,000 to be done from private. And I would also assume there are some other hospital orders which you have which will contribute besides CITCO. So maybe government order itself will be about 1,200-1,300 crores in this 2,000. So are we looking at only 700 crores kind of execution from private next year?
Parikshit, you should leave HDFC and come to me. Come on. You know more than I know. See, I mentioned as a policy, you have an order book of, let's say, 9,000 odd crores. If you are even doing 2,000, 2,200, 2,300, it is not a question of limits. The bank guarantees have already been issued for these projects. Am I right? So the point is that you take something for, there could be excess monsoon, and thereafter, earlier we never used to give guidance. This for 1 year I am giving a guidance. But then we have to take into account the monsoons, etc. Now, the bid pipeline and the visibility from private sector no doubt has increased manifold. But let us wait for the quarter 4 to get completed, when we will have clear visibility from our existing clients. And as you know, that our projects inherently have the potential to add to the order book in the same location, isn't it? So we will revisit this at the end of quarter 4. I think if 35% growth leaving 2021 is low, then you should come and join Capacit'e.
Okay. So the last question was on the net working capital. So you have said it's about 581 crores as of this quarter. So do you believe that, and obviously it's on a very low base, so the numbers, if I convert to days, looks very elevated. But do you think this is the peak NWC day in terms of crores of value? And with CIDCO ramp-up happening, it should reduce significantly because CIDCO has really, I mean, after advances come in, then that advances come in, I mean, it should be near zero net working capital kind of a project.
Yeah. So what happens generally is that you are ramping up operations. It was 300 crores on a WIP basis. There is an addition of only 32 crores for this quarter, which means the earlier WIP got built, and on net basis, only 32 crore increase was there. I do believe there will be slight reduction in quarter 4. There will be reasonable reduction in quarter 1, and there will be substantial reduction in quarter 2 to the WIP to go to the pre-COVID levels or even better. But I am sure over the next financial year, we will be at the pre-ILFS or better situation than that. I think that's the best we can do. But you cannot take away 6-7 months of COVID, which we have had to encounter. We have brought the people back. The revenue has gone up. Are we happy? No, we can do better. And that's what we intend to do in quarter 4. And then move towards the growth path. Now, simply put, once you are at a 400-450 crore level, it is automatic that your financial assets will reduce, converting into higher revenue.
Thank you. I would request Mr. Kanta to rejoin the queue. The next question is from the line of Kirti Jain from Sundaram Mutual Fund. Please go ahead.
Sir, first of all, congratulations for good recovery. So my question is with regard to our cost structure and margins. So given that we have dynamically moderated our cost structure and adopted according to our revenue and achieved a good margins, so can we expect this 16-17% of X of other income margin which we have achieved on a subscale operation to sustain when the operations come on a full scale, like of whatever 500 crore scale, which we achieve on a normal basis?
Yes.
Can we expect such margins, sir?
Yes.
Okay. With finance cost under control, sir, like as a percentage they will come down. That expectation you should build in, sir.
It is because the order book is higher. Government order book is there now. Fortunately, the guarantees in government have come down. Both central governments and state government, we believe that next financial year we will have some positive impact in the guarantee. So that if you see that at the end of December 2020, our bank guarantee within consortium has come down to 516 crore, which is a substantial reduction. And the project-specific limits of CIDCO, MCGM, those limits are separate. So I do believe that the finance costs will be similar to the current year over the next year, maybe slightly more if we receive 3,000 crores of order book. And therefore, on a double revenue, let us say when we did about 1,450 crores in the last financial year, that means FY20, and if we have a 35-40% jump over that, we believe as a percentage, the finance cost will be much lower. Secondly, you are aware that our fixed deposits with the bank are substantially high, and over a year we have about 16 crores of interest income accruing from that. So 16 to 17 crores. So if you actually net that out, our interest outgo is very, very within control. And most importantly, except MCGM, none of the advances are interest-bearing, whether public or private. This is a very important thing to note.
Sir, in the last quarter you had guided, if my memory serves right, in Q1 FY23 we will try to be debt-free, gross debt-free. That was the thing. So we stand by our guidance, sir?
Absolutely.
Okay.
We write on all these things, in bold when we talk to you. So we don't forget it.
Okay, good, sir. Good to see, sir. Yeah. Thanks a lot and congratulations once again, sir.
Thank you. Thank you very much.
Thank you. Ladies and gentlemen, we would request you to please limit your question to 2 at a time. The next question is from the line of Bharanidhar Vijay Kumar from Spark Capital. Please go ahead.
Good afternoon, sir. So just want a little more granular clarity on the big pipeline that you mentioned, which is 40,000 crores.
Sorry?
So is this...
Yeah, please go on.
Yeah. So you mentioned about 25 to 30% of it coming from healthcare. Can you give the remaining, of this pipeline? What would be the broad classification? Would it be your go-to real estate? How much of it is that? How much of it is affordable? How much of it is data centers, if any?
I suggest that I tell my colleague to send you the bid pipeline breakup. It's very difficult because the point is in government you have convention centers, you have stadiums, all these are F&B, factories and buildings. They classify under the same segment. You have a lot of PMAY projects. Now in Mumbai, PMAY has gone up to 32-story. So the point is that will classify in government as a high-rise. So we still have to, as I said, 40,340 crores is the bid pipeline which capacity is eyeing. Actual bid pipeline from, let's say, an L&T perspective could be 2 lakh crore or 3 lakh crore. So, but being a small company, being a one-segment company, what we will be targeting is this bid pipeline, plus the private sector 25,000 crore, which we can visualize. So, giving further breakups, detailed breakups, we will split it into 2 for your convenience. About 25% is what we see from healthcare. Another 20% from institutional, retail, commercial, and rest from residential, including affordable.
Got it. So this pipeline we would, target to bid in the near term, or is it like more like the next 1 year pipeline?
No. When we talk about a bid pipeline of 40,000 crore, these are the tenders which are on board to be tendered maybe over the next 6 months. This gets updated on a daily basis.
Got it, sir. Understood, and all the best, sir.
Thank you.
Thank you. Now we would request participants to limit your question to 1 at a time. The next question is from the line of Siddharth Rajpurohit from JHP Securities. Please go ahead.
Thank you, sir, for the opportunity. Sir, in the government project, the guidelines from the government was to reduce the retention money. So what would be the retention asked in the current bid pipeline, sir?
So nearly 40 crores has been reduced in retention from 31st March 20 levels. Going forward, it is different with different states. In Maharashtra, MCGM has come out that earlier the performance guarantee used to be between 3 to 5% and retention 5%. Now they have restricted performance plus retention, that is security deposit overall, to be 5%. In CIDCO, the overall security deposit was 5%, 2.5% bank guarantee we had given earlier, 2.5% to be built up through RA, which we believe will come down to 3% since the state bid guidelines have come. Similar for MARA, similar for MMRDA. So this is the case as far as the bank guarantees are concerned. In the private sector, we have already, I just mentioned in my previous answer, such a robust order book, let's say backlog 3,800, overall let's say 6,000 crore, and only an outstanding of 500 crores. It is self-explanatory on how the bank guarantees are being managed. So going forward, we believe that the bank guarantee requirements will reduce. The government is committed to construction infra, and if the government reduces and private sector does not reduce, people will walk towards the government sector. That's normal, isn't it? And most importantly, the government sector has become sensitive to timely release of payments. That's a very positive thing why we, even L&T during the COVID period, collected 55,000 crore. So the point is, across the industry, again, you cannot generalize to clients. I'm talking about the good quality clients. Good quality clients on time, and therefore, I do believe that the guarantee requirements will come down going forward, and which will help us to book more orders in the coming financial years.
Any long-term targets, sir, means the share between public and private that you would like to keep?
Sorry, please repeat.
Sir, any target in terms of the share in the order book between public and private you would like to keep?
It's very difficult to say. Before CIDCO came, we were 80% private. Questions were asked then. Now we are 60-40. Tomorrow we get another private sector of 500 crores. It is dynamic, sir. But generally we would like to have a healthy mix of public and private. We are obviously, with God's grace and whatever our operations have done, one of the key contractors in the private sector. So it's Capacit'e has a very good brand recall as far as the private sector is concerned. In government, we would like to target that 400 crore, 350 crore plus projects, because the competition below 250 crore, 200 crore is something which we wouldn't like to focus on. So that's how the order mix will unfold. I cannot give any guidance as of today.
Thank you. I would Mr. Raj Purohit to rejoin the queue. Request participants to limit your question to one at a time. The next question is from the line of Sagar Parekh from One Up Financial Consultants. Please go ahead.
So firstly, wanted to check...
Sorry to interrupt you, Mr. Parekh. Your voice is not clear. May I request you to come on the handset mode?
Hello?
Yes, please.
Yeah, so firstly wanted to check on the tax rate for FY22. What should we consider?
The full rate is 25% and we are following the same. However, in the Q1 there has been a loss, which we believe as a whole year we will not be having any loss. So the tax rate won't change.
Okay, and just on, so since we are growing our revenue base by 50% for next year, the working capital in absolute terms should increase by at least 200 crores, right? So just wanted to check whether the absolute gross debt level should remain where it is, or you think there should be some movement upwards in gross debt levels?
Gross debt will come down.
Okay, is that because of this CC to LC conversion?
Absolutely, because that was a COVID issue. So
right, but in spite of the 2,000 crore top line, the gross debt will come down.
No, we had a similar debt level of 260 crores when we were doing 1,500 crores revenue also.
Correct.
Point is, you cannot compare FY20, especially for contractors like us who are restricted to urban areas, because the intensity for the first 6 months in the urban areas was far higher than the rural areas. All right?
Right.
So you have to compare. So don't think it is going to be a 100% increase. You have to compare with FY20.
Understood. Understood. So FY20 levels also 35% growth, still the debt levels will be maintained at FY20 levels on a cross.
We have been doing that for the last 7 years.
Okay, sir. Thank you. That's it from my side and all the best.
Thank you very much.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on the good set of numbers and the guidance. My question is on the labor side. Are you seeing, if you can give some color, are you seeing them in plenty or that's becoming an issue as you see more and more construction projects coming up?
I understand you mentioned the labor, workmen.
Right, yeah.
No, that issue is behind us. So that's over. You will have holidays coming up in March. You will have holidays, Chhath Puja coming in April. That's a yearly phenomenon. But other than that, it's going to remain. So what happened in June, July, or May end in June, I don't think, and everyone prays it never repeats.
Great. Okay, that's all. All my other questions are answered. Thanks.
Thank you. The next question is from the line of Kirti Jain from Sundaram Mutual Fund. Please go ahead.
Thanks for the opportunity. So my question is on the MHRD project, like how has been the progress and what we are likely to do in terms of our share of revenues, something we can...
Sir, as I told you that earlier also by March 31st we will be clear on the consolidation process, whether the revenue can be added. We believe that revenue can be added. That's one part of it. But my team will clarify to you with a separate mail on this subject in a couple of weeks.
Not revenue addition, sir, like in terms of project progress, like either adding or not, but our share of profit will anyway come, sir.
Absolutely.
Yeah.
So I just mentioned that the Mahara project, in an endeavor, the state to complete the project in 4.5 years from the zero date, the main challenge the department and the client or the state government was facing was open space. To counter this, a government resolution from the Housing Ministry has come that BDD Worli, the project with us, under question, under reference, the height of the rehab buildings, which was earlier 22-story, will be increased to 44-story. And for the double basements under all the rehab towers will be removed, and that will be converted into multi-level car park, which means that we believe with the new GR in place, our proposal has been sent. We expect the approval from the empowered committee before 25th of this month, and thereafter in 2 months the project should start because we already have free land available. Therefore, I do believe that the revenue built up should start from next financial year, and thereafter for the next 4 years you will see 1,000 crores per year.
Hope, sir. Very good to hear, sir. Thanks, sir. Thanks a lot, sir.
Thank you.
Thank you. We'll take one last question from the line of Nidhi from Alpha Alternatives. Please go ahead.
Yeah. Hi, sir. Congratulations on the good set of numbers. Sir, I wanted to know about the depreciation policy of the company going forward, and since we have projected a revenue of upwards of 2,000 crores in the next fiscal, so how the depreciation is going to play against that?
The depreciation comprises of two parts. One is the core assets, and the other part is the site establishment. The site establishment at the moment, unamortized portion over the 9,300 crore order book is 190 to 200 crores. That will be written off on pro rata as 85% of the projects are completed. It will be very difficult for me to give you a complete sense of understanding. So if you can send your email ID through SGA, our IR team, we will be able to give those details. As far as the core block depreciation is concerned, it's close to about 10 to 12 crores every quarter, and which means about 50 crores over a year. I don't think that will change. That will continue for the next financial year. More or less, my guess is that the site establishment depreciation part will be close to 40 crore or thereabouts. So you can safely conclude that the next financial year, your depreciation would be 90-95 crores. Now, please do not hold me on this. I am giving you just numbers with my experience. I think my team will be able to put it in a more accurate manner and send it to you.
Sure, sir. I'll follow up on that. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Rachit Kamath for closing comments.
Thank you all participants for participating in this Q3 and 9 months FY21 earnings conference call. And we also thank the management for having given us this opportunity. Thanks a lot to Rohit sir and the team. Any last comments, sir?
Thank you everyone for joining on the call. We hope that we have been able to answer your queries. For any additional information, we request you to get in touch with SGA, our investor relations advisors. Thank you and look forward to hearing you in the next quarter. Thank you.
Thank you. On behalf of Anand Rathi Share and Stock Brokers, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.